Happy Wednesday, all to agents. Today we went over our brand new 2-1 buy down program on our Wednesday mortgage update. Thanks for joining us every Wednesday. If you do, we love giving you that information that you can use for yourself, for your buyers, for your sellers. So thanks again for joining us. But wanted to roll a little bit deeper into this 2-1 buy down program. So I'm going to go ahead and do that real quick. So basically, this 2-1 buy down program can be used for FHA, VA, and conventional purchases only. So basically all your A paper, FHA, VA, conventional, we can do it. This can also be used for primary and second homes. And there's a couple different tier options. There's a 2-1 and a 1-0. I think the 2-1 is the one that really makes sense. But basically, as an explanation, the 2-1 is 2 years where your payment is lower, and the 1-0 is 1 year where your payment is lower. It's not available for manufactured homes. Don't have to really worry about this part. That is pretty much just for the loan officer. So, as I explained, the two buy down tiers. So for the 2-1 buy down, year one, the interest rate is 2% lower than the note rate. Year two, it's 1% lower than the note rate. And then year three, you're back to the full note rate, but it is fixed. It's not an adjustable rate. If you kept the mortgage for the entire 30 years, you're going to have the rate that you are agreeing to on the note. The 1-0 buy down, that is year one, 1% lower than the note rate, and year two, back to the full note rate. Now, this is a little bit cheaper of a buy down, but I would say that if you're really trying to help out, a buyer or even a seller sell their property quicker, the 2-1 is the one that makes the most sense because you're going to save, they're going to save so much money. The cost must be seller paid. So as a seller cost, these are the seller benefits. Less price cuts, obviously, because the payment's going to be a heck of a lot lower for that higher home price for that buyer, which is going to be attractive. So the whole goal of this is to help the buyer and the seller. So less price cuts. You pay the upfront fee for the 2-1 buy down or the 1-0 buy down, but hopefully instead of cutting your sales price a lot, you're just going to be paying a little bit extra to help that buyer get the payment down. I'll go into that in more detail shortly. Quicker sell and more activity. Obviously, if you advertise in the right way, this program, you're going to have a lot of people that are interested in it. So let's get to the examples. This is basically the calculator that we use to break it down, right? So the loan amount on this is $700,000. The note rate is 6%. The term is 30 years. This would be the payment normally if it was a 30-year fixed loan without the 2-1 buy down, right? This grid right here shows you year one, year two, and year 3 through 30. So year one, you're at a 4%. Your payment is $3,341.91. You're saving $854.95 a month. Year two, 5%, $3,757.75 is the payment. $439 savings for the next that year. So basically 24 months of significantly lower payments. Now, as for an explanation, let's say the purchase price on this home is $800,000 and the loan amount is $700,000, right? The subsidy, which is paid by a seller for this particular scenario, would be $15,528.59, which is paid by the seller. But if your seller avoids, for example, a $40,000 price cut, your seller walks away with $25,000 more than they would if they didn't do this, right? And then the buyer gets a great deal. So what that's going to do is it's going to get you more referrals from the buyer because they got, this great payment for 2 years, as well as your seller who you sold the home quick for in a slowing market. So it's definitely a win-win. Also, I already went over that. So here's another example for the 2-1 buy down. So this one, the loan amount's $800,000. The rate is 6%, 30-year term. The payment would usually be $4,796.40. Now, year one and two, look at the savings here. Year one, 4%. The payment's $3,819. That buyer is saving almost $1,000 a month on their payment that first year. On the second year, they're saving $500 a month. So huge, significant difference. This is helping people get into the house and feel comfortable. It's kind of easing their mind as far as that mortgage payment, because it's never about the price of the home. It's never about what the rate is necessarily. It's about the payment, right? So this is definitely helping those people. Now look at this. The subsidy is $17,746. That's only $2,000 more than the $700,000 example. So let's think about this. In this example, this is a $1 million home, right? A purchase price is $1 million and a $800,000 loan amount. If your buyer can avoid dropping their purchase price by, let's say, just as an example, $70,000, right? Maybe they're not getting any offers at $1 million and they have to do a price cut. Rather than dropping at 70K, if they just gave their buyers this program and spent 17 grand, well, they're walking away with $53,000 more in their pocket, and the buyer saving almost $1,000 a month on their first payment for the first year, and $500 the second year. So that's going to give you a bunch of referrals. After the second year, the loan is fixed at the actual no rate of 6%. We already went over that. But basically, the thing about this program, and we're going to try and email this out to everybody, the PDF, so that you can see it and you can review it, is it's helping the buyer and the seller. The seller at first might be, like, oh man, I don't want to fork up a little extra cash. But if their house has been sitting on the market for 40 or 60 days at $1 million, advertise this program to the buyers. And instead of, having to drop it 70 grand, like the example I gave, they spent 17 grand to give the buyer a better loan, and then they walk away with $53,000 more in their pocket. So really, really, really powerful program. If you have any questions on it, you can call me directly, 619-313-7003, and we could talk about, how you market this, or, whatever direction you want to go. But I just wanted to touch base on that, give you a better explanation, because 5 minutes wasn't really enough to get the whole point across. But I appreciate your time, and I will talk to you next Wednesday.